Yeah, hello. I want to talk about the value of a business, your business. And I want you to think about it a little bit differently. We've got a process that we've been using. Really, it's been an extension of our practice for 25 years, doing mostly estate and succession planning and some wealth management for private business owners. And over the course of that time, most of the focus was on sort of just the fundamentals of, what's the tax implications of the sale of the business, or how do we transfer it to a son or daughter, etc. But the actual intrinsic value of the business is oftentimes, you know, sort of given short shrift, I guess you might call it, just not paid enough attention to preparing the business for intrinsic value build over time. And ultimately, what happens is then you lose opportunities to sell the business at a multiple or a price that you expect, and avoid a lot of the due diligence things that crop up in the sale of the business. If it's an internal transfer to a son or daughter or whatever, it's maybe not as important, but having good handle on your metrics and the intrinsic operational, intrinsic transferable value of your business opens up opportunities for better financing, for better deals, for opportunities maybe to tuck in under a larger competitor. There are a lot of other opportunities to sort of come out of the woodwork when you've got a business that really is working operationally at full value. And what I mean by full value is really more of a, think of it really as a due diligence like a private equity or a private investor might look at your business. They'll go in and they'll look at all the legal agreements, they'll look at your vendor agreements, they'll look at how you operate, how you do planning, your people, the agreements you have with the people, intellectual property agreements, other things, sales and marketing processes, not just cash flow, but certainly cash flow and free cash flow is, critically important. But ultimately, these things tend to be sort of, they're there. Your financial statements sort of show some of that. But most business owners, they started out as entrepreneurs. They've grown the business. They're doing well financially. These things just sort of get put off to the side. It's kind of a top-down mentality. You don't have a lot of good ideas necessarily flowing up through the rank and file. There's a lot of those things that become very important to incorporating the value of the business that at the entrepreneur's level maybe don't seem that important because they're reaping most of the benefits of the cash flow anyway. But it ultimately becomes a bottleneck, a restriction. And what we do through our process, and we use a lot of outside experts, we've got some analytical tools that I'll share with you later on in the video that you can take advantage of. There's kind of some couple of DIY tools to get your thoughts going on this whole thing. We find that we can increase the value by, multiple figures. A business is worth maybe $1 million, can be $2 million over the course of a couple of years. And I don't necessarily mean you're going to sell that business right now, but the enhancement can be significant. Certainly it's, mid to high six-figure type stuff for almost every client that we have, and sometimes more. We had a coaxial cable company that really was having difficulty selling. They're extending their lines of credit. They had good cash flow, but still they needed that lines of credit to sort of keep things moving. They didn't have good market share. They were always looking for sort of a new way to increase their market share, increase revenue. Those things are fine, but they tend to also impact the ultimate value, the transferable value of the business. And over time, it took several years, we were able to move it to a business that was sold to private equity, for multiple times what he originally was looking at in the beginning. So what I'm going to do in the next few minutes is just share with you some of the operational things, different way of looking at your business value. And at the end of the video, we'll give you some links if you want to take advantage of those. That's fine. A couple of free reports are available too, just to sort of get your thoughts around your business and what you're doing and what operational leverage and levers do you have that you could pull. So I'm going to start first with just give you a quick overview of the technology that we use. It's really more of a question and answer type of process. It's a consulting process. It's not unlike what a larger private equity firm might do for one of their portfolio companies, where they sort of do the deep dive. They don't just look at the financials, but they look at how the financials are used in decision making. They look at the people and other operational things. So let me take a quick look at that in the next segment. So hold on. Okay, here's an example of a company. The names have been changed, but just to give you an idea, revenue was relatively strong, annual profit was okay, etc. We took this business, and there's some analytics here that came in. They ended up at a B minus from our initial discussion. And what I really want you to focus on is kind of this workbook, which is just give you an idea of the types of questions that we go into in the areas. A lot of these are sort of embedded things inside the business that you may or may not necessarily be measuring yourself. Some of them don't apply to all businesses, of course. The financial, some of these things, typical financial reports cover them, but not necessarily to the level of maybe a CFO level that you might actually find quite useful. Sometimes we'll bring in a virtual CFO, somebody to sort of help rejigger the financial reports so it's more actionable based on services, products, departments, etc. Level of detail that oftentimes is overlooked. Brand awareness, product differentiation, revenue growth and things are sometimes financial. But we're looking at the size of the market that you have, how you play in that market, the sandbox. If it's a large sandbox, maybe you're a smaller player in a smaller geographic area, and you can grow that. Not necessarily have to reach for areas of new services, new products, new customers, necessarily to grow the value of the business. And that's my key point to this, is what we do is we look at the current level of revenue and the current level of operating expenses. What can we do? What can you do to increase the value of the business in terms of its operational efficiency? Ultimately, what happens then is it'll drive down your cost of capital. Oftentimes, we find clients that have businesses that, they got a cash line of credit, and it's fully collateralized. They can't go outside of that one banking relationship. There's lots of covenants, etc. The interest rates are not all that competitive, and by creating a more operationally efficient and quality value-oriented company, you can lower those costs, and it can be a significant difference in the cash flow at the bottom line at the end. You certainly will open up opportunities for competitive analysis, so you'll know your competitors better. Knowing your competitors better gives you an opportunity to maybe acquire them, to work out deals with them, or vice versa, for you to tuck in underneath somebody else. It gets a lot of those gears moving and those conversations moving that frankly aren't happening right now. We'll look at senior management. We'll look at the roles and responsibilities. How are decisions made? How is planning made, if any? Oftentimes, planning and decision making is done kind of at the top, and there's not a lot of flow through. You don't have a lot of alignment within the business, etc. Those things all impact the transferable value of this business. Sure, you can run a business, you can have good cash flow for the owner, and when it comes time to sell it, there's really not a lot of buyers out there for it, unless you can find somebody to just completely take that seat with the same expertise, which usually doesn't exist. So what happens normally is then it's more of a goodwill sale. A lot of discounting is done. You've got to take back seller notes. Those types of things all sort of restrict that bottom line. And oftentimes the clients that we have, they've done well, they've put money away, but their big asset is the business. And they're planning on that business to be sort of the funding mechanism for their retirement or for the next step. Maybe I'm going to sell this business and move on to something else. They're looking for the cash from that sale to fund the next thing they're doing. So it's a little bit different way of looking at your business. It's more of an inside-out type of a thing. And you can see there's a lot of categories here. We will look at these as we go through, and then ask some questions as we go and try to get a handle on really how well you know your business from all these different operational expenses. So that's kind of a quick idea what the DIY tools will give you is just sort of a quick, partial 10, 20, 30 question type of thing. Give you a snapshot, show you some initial areas of weakness that you might want to focus on. What we do typically is then go into a deeper dive discussion. It might take 60 minutes or a little longer, and get to the point where, yeah, this makes some sense. I really should look at my business a little more closely. And then we will create, typically it's a half-day session, maybe with the executive team, all the owners, or other key people, other advisors possibly as well that would be instrumental in making any decisions. And we sort of lay it out there. We go through, we spend time, we discuss it, we answer the questions, and then we come back. The software allows us to sort of benchmark the questions against some private sale databases and other proprietary databases that are out there that have private sale activity. It's not just a multiple thing, it's more of a, let's try to look at what this transferable value is for the business, and then we benchmark it. And then from there, after that half-day session, we've got a pretty good roadmap of the things that you should be working on first, second, third. Usually starts with kind of the fundamental things, reviewing agreements, getting some fresh legal look on some of the things that you're doing, a fresh financial look. Typically we strip apart the financials and look kind of deeper into those and come back with questions. Oftentimes, the tax return, the CPA, bookkeeper, they don't really have the answers that we need. So we kind of have to take the data and 2, 3, 4 years and kind of recreate it, and then do some projections, pro forma projections, similar to how you would position your business for the future sale. The key aspect of this is you should be planning and operating your business on a routine basis with transferable value at the center focus at all times. Even if you have no reason or thought to sell the business now, it allows you then to be able to take advantage of opportunities that come along. And when the time crops up, you're more prepared. You're much closer to, okay, let's put this thing out in the market. Let's start to get some feelers. Let's answer those phone calls that we're getting now from some of the PE firms, and we can actually engage them and have a pretty good idea of what we've got. They know typically a lot about your business and the industry that you're in, typically more than you do. And so one of the things that we try to do as well is tap the PE universe, and through contacts and through the networks that we have, we can get an idea of the type of market that you're in, what's going on in that market on the PE side, what investors are looking for, and that'll help drive some of the decision making and focus as well. So it becomes a collaborative effort. My group is really a group of trusted advisors that are spread across a lot of disciplines. They're all self-employed, if you will, tend to be consultants. We're not working with the big accounting firms, the big advisory firms. We're taking people that have been doing those types of things. They're now on their own. They have their own practice. They're nimble. We can bring them to the table. They're relatively cost effective, if you will, for what they charge. And we can get sort of that PE level experience for the smaller business. That's where the gap is, we see, is for that smaller business, the 2-3 million up to maybe 15-20 million in revenue. They're not getting the type of advice that they should be. They're a little bit under the radar, and there's a lot of businesses that need this type of help that aren't doing the due diligence that they should be doing now and as an ongoing process. So I hope that helps give you a little bit better idea of the analytical tools that we use and the approach that we take. So I hope that was helpful. So in summary, what we do, BE Financial, is really an association of strategic partners across several disciplines. We have several deep networks. We work with our business owner, trusted advisors, of course, typically right out of the at the beginning, and then we bring in expertise as needed. We have a nationwide group that follows the same process that we do. There's over 300 advisors that are known as CBGAs, of which I'm one. One of the analytical tools that we use is the Value Opportunity Profile, which is similar to the one I just shared with you. It goes a little deeper on the financial side as well. and we try to benchmark, get a good idea of what the real intrinsic value of the business is today, and 8 core areas we tend to focus on of where levers of opportunity could apply. We also do a strategic capacity report, which is sort of a different way to look at things. But ultimately the goal is to take the current business client that we have, the current operation that they have. Certainly growing revenue is important, but that's just one aspect of it. Most business owners tend to think they're going to increase the value of the business by doing more sales, by new products and services, new markets, etc. That's actually a sort of a risky way to grow the value of the business. You certainly need to grow the bottom line, you need to grow the top line, but you can do a value enhancement inside the business as well. And by doing that, you actually find there's quite a bit of leverage available to you to increase this value, which is one of those sort of unknowns out there. But we can get you a much better handle on where you are today, what you can do over the next 12, 24, 36 months to multiply that value. And ultimately, it's not uncommon for us to see a double, sometimes a triple, but certainly 50, 60, 70% increase in the value of the business. And value meaning intrinsic, transferable value, something that's more tangible than just, well, my buddy down the street sold their business and they got, 2 times revenue or 3 times revenue or 5 times EBITDA or whatever it is. Those multiples really tend to be sort of broad averages across the spectrum, and it's the company specific that we're looking for. Company specific risk that you have is what we're looking for, and then mitigating that risk. There's a lot of company specific risk that's sort of in there that's not identified, and that's ultimately where the opportunity lies. So at the end of this video, I'm going to have just a link for you. It's a couple simple reports that you can try out. It'll generate a report for you automatically, and then what goes along with that is a follow-up from us and our team. We'll spend a few minutes with you going through it and helping you diagnose kind of what the next steps are. Hope this was helpful.